Okay, we're live. Good afternoon. Today is it's Friday, the 24th of September, 2010. Let's go ahead and take a look at this marker. We had another strong week here, and the market did close above that neckline of this inverted head and shoulders on the weekly time frame. Now, yesterday it was yesterday we had it was looking like we had this market really wanting to break down and maybe test some lower levels, but the 112 area did hold up, and then obviously today we had this gap higher. So I was suggesting to people that you start taking some profits and maybe even hedging long positions. And one of the main concerns of mine was the IYR. The IYR has really been a leader here, and it's been, it had broken past the resistance, the highs for the year, that is, on Monday. Tuesday it failed, Wednesday even harder, and then of course yesterday was really looking like, well, there's going to be a bigger issue maybe for the rest of this market. We need to get defensive. Well, obviously the story today was we had this big gap higher, and I had actually come into the day with a small short in the SDS. Now the SDS is the double short SPY position, and I had gotten involved here yesterday, sold half of it at that point, half of the balance there, and then had gotten out in the pre-market at 30.05 or so. So it really wasn't a bad thing, and if you were able to switch gears quickly and recognize the strength, even in spite of really a lack of expectation for further upside this morning from myself, it turned out being a decent little day with some nice movers. Someone last week on Friday, I believe, was asking me about Titan, TWI, and we were talking about the weekly time frame there, and it had broken out today and really turned into be, my best trade of the day was this TWI, and I'm still holding some, but a lot of opportunity out there. We had 2,500 advancing stocks and just 500 decliners, so real positive breadth. And this is just looking like a little shakeout candle here. This gravestone doji, I think, is what they call it. Not that I'm into candles. I don't really think you need to put a lot of weight in recognizing candles and that sort of thing. But we've got to look at this market objectively and say we did close above that 113.20 level that had been a big area of resistance here recently. We broke it, of course, on Monday, started pulling back slowly, then it looked like the selling was going to pick up, but we're holding support levels. That 5-day moving average we had gotten below, and last night I even said that now we're below that 5-day moving average. We have to look at this market as guilty till proven innocent unless we can get back above, and let's take a look at the 10-minute time frame, unless we can get back above this level right here, which is 113.60, and basically when we opened at 113.60-ish, and the market just took off from there, it said, listen, stay away from the short side here. This could get ugly. So we got right back up to the highs for the week, and we can look at that 114.80, 115 level, and then look at the daily time frame. And this is what we were looking at earlier in the week as a potential level of resistance for this market. And if we can consolidate and continue to run higher in this S&P 500, the next bigger upside objective will be about 118 or so. And there's really not a lot of reason to think that we're not going to do it when you consider that anytime people try to get short this market, it seems they're just getting they're getting their heads handed to them quickly. We're above the 50, 100, 150, 200-day moving average. Now, they're not all rising, but we did find support at this green 200-day moving average. So we've been holding above it on a closing basis now for the last 10 sessions since gapping up above it a week ago Monday, rather, the 13th. Was that a Monday? It was. So the last 10 sessions we've stair-stepped higher, and this bigger level of support right in here continues to hold. So this is a pretty important line in the sand, I think, for the bulls. And now we want to look at this 113.60 next week early on as an important level of support. It's where we have that 5-day moving average rising once again. The market is in an uptrend here on the daily time frame, and we have to look at it and look at, for instance, what's leading this market. The Nasdaq is getting pretty darn close to the highs for the year. We had been showing some resistance up at this 48.60 area. Was really where this battle was kind of being fought. We had those long wicks in there, and the market was able, obviously, to push up through that level. Now it's challenging this level, and up through here, we have, we're pretty darn close to highs for the year. So the NASDAQ on a weekly time frame, I guess I have those in there from a while back, which was some Fibonacci, which, but if we take a look at it, here's what's looking like a bigger level. And for William O'Neill fans, here, is this a big giant cup and handle here on the weekly time frame? If so, then we break past this resistance, whether you call it a cup and handle or whatever. Like I always say, it doesn't really matter what you call the pattern so much as long as you recognize the bullish forces that are there, and breaking past this resistance that's been in place since basically May, June of 2008. Then we're going to probably head for the next bigger level on the NASDAQ, which is up here at about, 52.5, 52.40. So, things are looking bullish in this market. Now, you look at this daily time frame here, and, from that failed breakdown where we had these lower highs and lower lows, and it just shows, again, I talk about it a lot, and it's really the reason that I am a trader is because I don't trust the market for very long, and we have these incredible reversals that you have to be willing to change your mind quickly. Now that can be a problem as well. You look at it and say, well, when do I stay with the trend? Well, I think that the best thing to do is really to take it on a stock by stock basis and just simply manage risk. As I was saying to subscribers last night, that I had a small index short. I still had some longs in the market, and I thought that there weren't a lot of good short setups in the individual names, so that I was expecting that we probably would at least go sideways to maybe somewhat lower in the market. But you have to be able to change change midstream here, and so the point I was trying to make though is that most stocks were actually looking more bullish to maybe neutral, just kind of starting to begin to consolidate. The scanner I used showed the Qs in the number one spot for the bullish today, and I looked at it and said, geez, that looks like out of place, but here we are up 2%. The Russell 2000 up 3%, 3.25%, and this market's looking pretty healthy. This again, the 68 area is really for the Russell 2000. That's basically the 113 level for the SPY. Interestingly, like I pointed out on Wednesday, the mid cap MDY is really has broken that level and looks very similar to the S&P 500. So the Russell 2000 though, still got to get up through that 68 level, but impressive how we have a rising 10, 20, and 50-day moving average. We hammered at that resistance, pulled back, and quickly are right back up to it. The semiconductors had a great day, up 3.8%. They had been battling that 50-day moving average, and it was a pretty short-lived battle. In this prior support in here was acting as resistance just at the 27 level, but we blasted right up through that level today, and the semis had a decent day yesterday as well, as they were holding above what I was talking as important support at $26 a share. The financials just barely squeaked up through the level I've been talking about, which is 1460. Now it closed at 1461, which is obviously just a penny off that. Let's just kind of back this up to frame it a little bit better. But this is that 1460 level. It's where we have that declining 5-day moving average. So the financials, to me, it's great to see that this market is rallying while the financials are still kind of in an unhealthy look. It's good to see that we don't need these financials and all their problems to get this market to rally. That the market is looking beyond financials, it would appear. But if the financials were to rally up through the what am I trying to say? If they were able to rally up through the 1510 level, then I think that would be a good message to this market that it's likely to be able to sustain itself pretty well here. So, a lot of strength. Like I said, in a lot of areas, we had we've been in a strong uptrend. Let's just go back to the S&P for a moment. We've been in a strong uptrend over the last month, and these the market is pulling back only for very brief periods of time. When it does pull back, it seems as though people are quick to jump on the bearish bandwagon, and then the market recovers very, very quickly here, and that's with strong breath, 25 to 5 basically, or 5 to 1 advancers to decliners. So there's a lot to be encouraged about here. It doesn't mean you never let your guard down. Like I said last night, this morning, that as soon as you think you have this beast mastered, it's going to try to make you look like a fool, and that's what it did, I think, today to a lot of people with this, with that shakeout yesterday in the gap higher today. But we did close above this neckline on the weekly time frame, and just technical analysis 101 pattern recognition says an inverted head and shoulders pattern is a reversal pattern that's preceded obviously by a sell-off, which we had seen. You add the height of this pattern to the breakout point and come up with approximately 125 as a potential bullish objective. I think that's too aggressive at this point to be looking that far ahead. But this has been a nice consolidation. If we can maintain above that 113, and really the 112 level in my mind is the more important level for us to hold. But if we can do that, this market's got a shot, I think, of testing the highs before the end of the year is out. It could be that we're in for a good fourth quarter. So let's take a look. What else did I want to mention? I wanted to mention some of these individual names. I mean, you look at things like Apple. I see people trying to pick the top in Apple every day, and obviously that's just a fool's game to try and pick a top in here. It's just the strongest stock there is, basically. You look at big stocks like IBM. Look at this weekly and monthly time frame. I mean, IBM is looking like it's been underneath this level for the last 11 years, and breaking past here, we could get a big momentum move in IBM that helps fuel the broader market. General Electric, really, the monthly time frame obviously doesn't look that great, and the weekly on GE is kind of looking very similar, as you would maybe expect, to the broader market, that we have what's kind of looking like its neckline here at about 16 and a half. But then you go down to the daily time frame on General Electric, and we see this is an important level right here. I personally get bored to death with a stock like General Electric, but it looks capable of rallying maybe up towards 18 and a half. Not immediately. This is, if you look at this in terms of the S&P 500, this might be 113, this would be 115 and 118. I probably should overlay them, but I'm not familiar enough with how to do that without screwing up my charts. But there's broad market strength, and stocks like Amazon just continue to ramp higher. We were talking about this, as it broke out. I was looking for a pullback in here, which never occurred. I was thinking maybe it had a chance to get up to 145, and here it is, just up at obviously at 160, and again, it's at all-time highs. It looks great. There's a lot of good, strong stocks in this market, and that's what to focus on. Even some of the little names, like everyone was talking about JASO this week, myself included, and it's been a great stock for the week, and looking like it's still heading, probably at least up to this level here at about close to $9 a share. So, there were little stocks that made great moves this week. Some of these Indian names, SIFY. Yesterday I thought I was smart for trading it from $1.93 up to $2.32, and then here today it had another huge move, and its little Indian counterpart REDF. The point is, there's broad strength. From gold. GLD, up at all-time highs. Silver, up at all-time highs. We've got a lot of good things happening in here, and the Federal Reserve obviously met this week. The dollar's getting crushed, continuing lower on the UUP. So there's just a lot of good events going on for the market, basically. So, the key is to continue to be able to find the low risk, high potential ideas. Ideas like TWI, which are breaking past multi-year highs. Stocks like Hain Group, HAIN, which still have room to run and are consolidating under a nice breakout point here. And there's just a lot of those types of stocks currently, in this market that look pretty decent. Some of the stocks that people are, want me to look at here would include KIM. This is a REIT, I believe. So Kimco Realty trades, several million shares a day. What is about 4.8 million shares a day. It's in a nice uptrend. It had this big volume surge, kind of lighter, lighter volume relative. The biggest volume occurred right here on this day. Then heavy volume on these 2 days as it pulled back. Lighter volume today. So I'm not a big. I don't believe that you need huge volume in the market to sustain a breakout, but in individual stocks you do. And this one, the pullback, the volume on the pullback was a little bit of reason for pause, I guess. But maybe getting back above 1680, I think this one could get going higher. So if we take a look at the 4-day volume weighted average price, since all that volume traded, it's not actually as bad as I thought. The average price over the last 4 days was 1660. So it does look decent. People are asking also about RIG, and RIG I know has been a pretty frustrating stock in here lately. But it's the daily time frame. It broke some resistance from August. It's been holding real nicely along this rising 10-day moving average, and just kind of been chopping back and forth. When we look at a 30-minute time frame, it's really, in order for RIG to get going, it's going to have to take out about $60.60 or so. Until then, it's just in this little frustrating range. I think that's chopping a lot of people up who are attempting to trade it. But the highs of this, maybe this week, for instance, $61, I guess, up through $61 a share. I think that it's probably a stock that could get going higher. And continue to have some momentum. ATSG is another one that I'm being asked about. Now, this one's a little bit thinly traded, only 406,000 shares a day, but it definitely has a bullish-looking pattern to it. The weekly time frame, it looks like it's heading towards maybe about $6.50 a share, but it looks decent, but thinly traded. Raise stops up to a level that would be comfortable for whatever it is that you would be looking at. I'm not going to have time to get through all these stocks. I can say that right now. KMX, CarMax, it's extended here. It's just had an uninterrupted run from 19.5 to 27. Where does it come from? Where does it have the potential to go to? My friend Derek Hernquist, put that in his blog post today. Where does it come from? Where does it have the potential to go before it's likely to encounter a source of supply that might slow it down? We're kind of there, I think. I think that you're playing a dangerous game if you're entering new longs in CarMax. It had a nice consolidation and then another burst higher the last 3 days from 24 to 27. I would say the name of the game in here is manage your risk, raise your stops up, and make sure that when a reversal or at least a pullback comes, it could could maybe come down to 25. Unless you're comfortable giving that much up, then I just manage the risk. KFN, here's a financial that maybe getting above $9 a share could get going. It's let me take a look. KFN. So let's take a look here in the weekly time frame. It's been consolidating nicely, maybe above $9 a share. It gets going. Right now, it's kind of a little bit more neutral, I guess, and really not necessarily the best looking one, but it doesn't look bad either. So I think that let me just take a look at this other one, which was Lululemon. Lululemon, was breaking down hard. It reversed back up. They announced earnings or something, I believe, really hurt the short sellers hard. And from that failed breakdown came this real fast move. Now it's consolidating nicely, pulling back, and the weekly time frame still looking bullish. It's got this bigger level that it will eventually need, that is kind of testing at 46, but above maybe this level here next week, early 43.5, you could get involved. You look at this as maybe these higher lows in here, above 43.5, it could be getting back up into the high end of that range. I've also got a question from Going Mackay for CTRP. And by the way, the other questions, you're not seeing them on Twitter because those were ones that subscribers have asked me in the chat room, and that's a benefit of being a chat room member and subscriber to Alpha Trends, is that you're going to get your questions answered before Twitter, and I'm not going to take a whole lot of them here. So let's take a look at C-Trip. C-Trip's been kind of just grinding higher and finally really getting that momentum now. It's up at all-time highs on C-Trip, on CTRP. It's a choppy stock. The action of these days in here kind of reminds me of Rig a little bit. It seems like it's ready to going. It wants to go. It looked like it was going to break out, gaps down, really messes with people, and then this resistance had held as support today. A great day, so it's in a great uptrend. Manage the risk on it. There's no reason to think that it's going to do anything but go up right now. But obviously, again, you can't. You have to manage the risk on it. Shoe, this is Stephen Madden Shoes, which is looking like, at least on this daily chart, big cup and handle here with resistance up at about that $40.50 level. Let's take a look at the weekly time frame. Real nice pattern, and Stephen Madden has held up better than all the rest of the shoe companies. You have like Skechers, SKX, and no one liked my joke about 2 weeks ago when I put on Skechers. I said it doesn't look like there's any evidence that it's shaping bottoms in here. Anyways, that was because they have the bottom shaping shoes, but I guess I shouldn't do the comedy. SHOO, though, real nice weekly uptrend. If it breaks these levels, it's probably going to continue to squeeze shorts on that daily time frame. It's poking away at that resistance up at about the $40 level, and it looks like a nice stock that probably should continue higher. Maybe it takes a break of the highs of the last 2 weeks to get it going near 37.80 or 39.80 rather. But it's another one that it's in an uptrend. It looks decent. No reason to think it's not going to go continue higher. XTEX. Let's take a look at Crosstex Energy. 193,000 shares a day. Really thinly traded. I don't like to trade these types of stocks. It has a very nice looking weekly chart though. It's been consolidating nicely. This prior resistance acting as support on the daily time frame. Probably going to need to clear about 13. What is this? About 13.25 or so. Even above 13, it probably gets some momentum. So it looks good. The only problem is it's thinly traded. I'd say worst case stop down near about 12.02 or so. And you know what? It's Friday afternoon at 23. You know what? I'll look at this last one for What a Whale, which is MOS. And What a Whale is suggesting I should change my Twitter icon because I look completely different. And that's just a new thing recently. I'm not sure if I should stick with this image or not, but just trying it out. This might be just a very short-term deal. Anyways, the MOS is in a nice uptrend. It's been grinding higher here. It just, it's a grind higher. So if you have the patience for this grind higher type of stock, you look at it and say it's making these higher highs and higher lows. Higher low, most significant one here, down near about $59 a share. Where does it have the potential to go before it's likely to encounter resistance? This gap down level did find resistance once. We're getting up to it, so maybe it's got a few more points left in it, but it's one of these stocks that I don't prefer to trade because they're just so damn choppy. But if that's the type of stock that you trade, it still looks good for a couple points, and seems like it's in a nice trend that should be able to continue higher. So with that, we are done for today. It's Friday the 24th. See you back here on next Wednesday, and hope everyone has a good weekend and had a great trading week as well. So talk to you Wednesday. Thanks.